What is going on, everyone? Welcome back to the channel. Today is April 24th, 2026, and the market is getting absolutely hammered in the tech sector. We have 5 major stocks down anywhere from 6 to 9% today, and we need to talk about what is happening, where the key levels are, and most importantly whether any of these names represent a buying opportunity or a falling knife you need to avoid. We are covering Salesforce, Lucid Group, Adobe, Palantir, and Oracle. Grab a coffee, let us get into it. Alright, let us kick things off with Salesforce, ticker CRM, and this one is a real gut punch today. The stock is down 8.69%, sitting at $173.30, and the volume tells us this is not a random drift lower. We are looking at over 22.6 million shares traded today versus an average daily volume of about 16.2 million. That gives us a volume ratio of 1.4, meaning 40% more volume than normal. Institutions are clearly moving out of this name in size. Now let us talk technicals because the chart here is genuinely concerning. CRM is trading below both its 20-day moving average of 180 and its 50-day moving average of 187. Those levels are now acting as resistance overhead. The one piece of good news is that the current price is right at the 200-day moving average, also sitting at 173.30. That is a critical battleground level. If buyers cannot defend this zone, the next meaningful support is back near the 52-week low of 163.50. The RSI is sitting at 39.9, which is getting close to oversold territory but has not reached the panic zone yet. That tells us there could still be more downside before a real bounce materializes. From a fundamental standpoint, the PE ratio of 22.2 is actually quite reasonable for a SaaS giant, which suggests the sell-off may be more macro or sentiment-driven than fundamental. The stock is down massively from its 52-week high of 296, meaning it has already shed nearly 42% of its value over the past year. The 6-month high was 265, and we are sitting almost 35% below that. My 3-month price target is 185, rating is hold with medium confidence. Do not chase this lower, but watch the 200-day moving average like a hawk. Next up is Lucid Group, ticker LCID, and folks, this is the most technically extreme stock on our list today. The stock is down 9.26% and is essentially kissing its 52-week low of $6.21. We are at $6.27 right now, and the distance between here and that all-time recent low is basically a rounding error. This stock is in serious trouble technically. Volume is elevated but not dramatically so. We have got 37.5 million shares traded versus an average of 34.2 million, giving us a volume ratio of just 1.1. So this is not a massive institutional flushout, which is actually mildly interesting. It could mean retail investors are the primary sellers here rather than big funds. Now here is where it gets really striking. The RSI on LCID is 17.8. 17.8, people. Anything below 30 is considered oversold. Anything below 20 is extreme panic selling. This is one of the most oversold readings I have seen on a stock of this size in quite some time. The stock is trading 32% below its 20-day moving average of 851 and 34% below its 50-day moving average of 945. That kind of distance from moving averages screams capitulation. However, and this is a big however, there is no PE ratio here because Lucid is not profitable. The market cap is just $2.3 billion for an EV manufacturer burning through cash. The 52-week high was $33.70, meaning this stock has lost over 80% of its value in the past year. This is a speculative name only. An RSI this low can mean a dead cat bounce is coming, but the trend is firmly down. My 3-month price target is $7.50 assuming any stabilization at all. Rating is sell for most investors, with a very speculative watch for high-risk traders only looking for that oversold bounce. Moving on to Adobe, ticker Adobe, and this is a name that a lot of long-term investors hold and are watching nervously today. The stock is down 6.63% to $238.98. Volume is notably elevated, coming in at 9.6 million shares versus an average of 6.8 million, which is a volume ratio of 1.41. Similar to Salesforce, we are seeing above-average institutional activity driving this lower. The technical picture for Adobe is one of a stock in a confirmed downtrend. The current price of $239 is below the 20-day moving average of $241 and well below the 50-day moving average of $252. The 200-day moving average is sitting right at the current price of $239, so again, like CRM, we are at a critical juncture. The 200-day MA is the last line of defense before a more meaningful breakdown. The RSI of 47.7 is actually the most neutral on our list today. It is not oversold, it is not overbought, it is right in the middle. That means this sell-off is not yet in capitulation mode, which could mean there is more downside risk before we reach a climactic low. Here is what stands out fundamentally. Adobe is trading at a PE ratio of 13.93, which for a dominant creative software franchise with massive recurring revenue is genuinely cheap. The stock was at $422 just a year ago. It hit a 6-month high of $359. We are now 33% off that level. The concern for Adobe has been around AI competition threatening its creative suite dominance. But at a 13 PE, a lot of bad news may already be priced in. My 3-month price target is $265. Rating is buy with medium confidence. The 200-day MA needs to hold here for that thesis to work. Now let us talk about Palantir, ticker PLTR, one of the most talked about stocks in the AI space and down 7.24% today to $141.57. Volume is running at 58.4 million shares versus an average of 46.2 million, a volume ratio of 1.26. This is meaningful distribution volume in a high-profile name. The technicals here are actually more nuanced than the other stocks we have covered. Palantir is trading below its 20-day moving average of 142.61 and just barely below its 50-day moving average of 144.20. The 200-day moving average is sitting at 141.57, exactly where the stock is trading right now. Sound familiar? Yes, another stock sitting right on its 200-day MA. This is a trend across today's big movers. The RSI of 44.4 suggests we are in mild oversold territory but not at panic levels. The 6-month low was 128, so there is a meaningful support zone in the 128 to 130 range if the 200-day fails to hold. Now here is the elephant in the room with Palantir. The PE ratio is 221.2. That is not a typo. 221 times earnings. Even in a world where AI is driving massive growth expectations, that is an extraordinarily high multiple. The stock hit a 52-week high of 207.52 and a 6-month high of 207.18. It is now 32% below those levels. The debate on PLTR is always the same: incredible business with real government and enterprise AI contracts versus a valuation that leaves virtually no margin for error. At current levels, I would say this is a hold. The 200-day support is critical. A break below 135 could get ugly fast. My 3-month price target is 155. Last but definitely not least, we have Oracle, ticker Oracle, down 5.98% to $176.28. Now on the surface this looks like another beaten down tech stock, but when you dig into the technicals, Oracle is actually telling a very different story than the other 4 stocks we have analyzed today. Volume is just barely above average, 37 million shares versus a 35 million average, a volume ratio of 1.05. This is the most controlled, orderly pullback on our entire list. The selling pressure in Oracle is notably lighter relative to its average trading volume. Now here is where Oracle separates itself dramatically. While every other stock on our list today is trading below its 20-day and 50-day moving averages, Oracle is trading above both. The current price of 176 is above the 20-day moving average of 156.41 and above the 50-day moving average of 153.70. The stock is showing genuine relative strength compared to its peers today. The RSI of 69.9 is the standout number here. That is just barely below overbought territory, which is the exact opposite of what we are seeing in stocks like Lucid with an RSI of 17. This tells us Oracle has been in a strong uptrend and today's pullback is a healthy breather, not a breakdown. The fundamental picture supports this. Oracle has a PE of 31.65, which is reasonable for a cloud and AI infrastructure player. The 52-week low was 134, the high was 345. The stock has recovered significantly off those lows while most tech names are still struggling. My 3-month price target is $205. Rating is buy with high confidence. Oracle is the strongest chart on today's list by a significant margin. Alright everyone, let us do a quick final scoreboard. Oracle is our top pick today, buy with high confidence. Adobe gets a buy with medium confidence at that 200-day moving average. Salesforce and Palantir are both holds, watching critical 200-day support levels. And Lucid Group remains a sell given the broken fundamentals despite that extreme RSI reading. If you found this analysis valuable, smash that like button, it genuinely helps this channel grow. Subscribe and hit the notification bell so you never miss a daily market breakdown. Drop your thoughts on any of these stocks in the comments below, I read every single one. See you tomorrow, trade smart, and manage your risk.